Hello viewers, it's your tutor CPA Charles Cofield. Today we are going to proceed with where we stopped last time. We had discussed about the first topic, which was management, information and communication. We looked at the definition of communication, the information and value of information plus the measurement theory. And that's where we ended last in our previous video. Today, we are going to look at our second topic as far as MDC is concerned, or performance management for those in SCCA and others. We are going to look at the nature and the role of management in accounting. Here, our emphasis is going to be, we are going to explain what management accounting is. We try to look at the ethical responsibilities of a management accountant. But what we shouldn't forget, we said in MDC or in MDC paper, the examiner is going to be looking at us as cost and management accountants. So we need to know what management accounting is all about, and we also look at its nature. So let's first try to look at the definition of management accounting. Then we can also see other things, but we are also going to look at the ethical responsibilities of a management accountant and how we resolve, if at all there are certain conflicts that may arise as far as when the management accountant is executing his or her duties. So management accounting, this is concerned with providing managers with appropriate financial information for planning, controlling, and better decision making. So that's all about management accounting. We are providing managers with information. It must be an appropriate financial. It is in a financial part. In other words, since we are going to be looking at the quantitative aspects, or we will find ourselves looking at the financial statements, the reports of financial statements and all that, we try to give the appropriate information. In other words, we give them the managers, they may be head of different departments. We give them the information, we give them a go ahead, or we give them advice on whatever situation that may arise in an organization. And that information may be in terms of planning, because if the information is all about we are advising on the budgets, it's part of planning. If we are controlling costs or even making decisions, because if we see that we advise that the information you have picked is right, then we can use that information and make a decision, and we say maybe we'll go with this because the information has been verified. That's all about management accounting, and it's what we can talk about as far as the definition is concerned. We've said it is just providing managers with financial information for planning and decision making. Therefore, we are mainly advisors, and we provide information to help the decision making process, because we are not going to be, a management accountant is not going to be the tax accountant, finance accountant, or the human resource manager. But those people provide the management accountant with the information that he or she will analyze and summarize it in a way that is understandable, and finally, he or she will offer his or her advice in relation to that matter. You may find it is only one management accountant, but the difference between a management accountant and a financial accountant, you find that the financial accountant is basically on the side of the financial statements all along, their preparation and all that. But the management accountant goes ahead to advise, meaning the management accountant is always having broader ideas in terms of tax, in terms of finance, in terms of every aspect, costing and all that. So that's it. For example, you may say you may find a scenario whereby the human resource or the human resource manager is giving you scenarios that in an organization will have a higher labor turnover. Then you need to find measures that you can use. You need to find measures to solve that, since you're a management accountant, because we always look at the management accountant as the problem solver in an organization. Someone says there is always a labor turnover, or employees are leaving the organization. Others are coming, these are going, these are coming. So the labor turnover is high. Then you can analyze, you see what causes that, and you also supplement, or you give advice on what measures the HR department should employ, so that they can be able to reduce that labor turnover, if at all it is the challenge. And that's how you become a problem solver. So that's basically the role of a management accountant. Not just reading the reports that have been presented by different managers within the organization, but to also make sure that you are providing an appropriate advice, so long as you have understood the problem. So having understood the management accounting in details, then we can try to look at the roles of a management accountant. The other side we've been defining, it's like a department. But this time around, we are looking at a person. Though the roles of a department, you may find at the same time they are the same roles of a person. But the roles of a person, they are always more than the roles of a department. Because you may find in the department, if let's say it is a customer care department, its role is to make sure maybe customers are treated well. That's the role of a department. So the individual employees, they have different tasks that they need to do so that they achieve that goal. So, but let's try to look at the role of a management accountant, at least what the management accountant can do in any given organization. These are the things that the management accountant does. Roles of a management accountant. So these questions, these roles, they are examinable. Sometimes they may ask you to discuss the role of management, the role of management accounting. And sometimes they may ask you the role of a management accountant. They are the same, but the way you phrase them. So let's try to look at the roles of a management, the role of management accountant. But we say the role of a management accounting are the same roles of a management accountant, because it's the management accountant who undertakes the management accounting. The other one, it's like a process, but you are an individual. So what the process does is what actually the person is doing. So the way you phrase them is what makes a difference. One, we have planning. Planning, we are saying that the management accountant helps in formulating or formulation of future plans by providing information that helps in decision or in deciding what products to sell, at what price, and in which markets. Therefore, that's how a management accountant facilitates the planning process in an organization, by formulating future plans. Those comes in terms of the budgets. You formulate the future plans that are going to help the entity to decide on the various pricing strategies. Because at the end of the day, if you have known that maybe we are going to be producing such and such amounts, then you can also be able to forecast what will be the selling price, depending on the prevailing, maybe inflation and all that, conditions that are happening in an organization. You can also tell where you can actually sell the products. You may find, if let's say we look at these beverages companies, you find that we have Coca-Cola, we have Pepsi Cola, and let's say the Ham Cola. You find that Coca-Cola and Pepsi Cola, they are more within the town, but they are less in rural areas. But these Liham Colas, for them, they strategized in selling those rural areas because they found out that the market within the cities, it has been occupied by these big brands. So it is the management accountant to plan that maybe in such and such periods, we should take our products this side. If maybe it is Christmas period, we take the products this side. It depends. Those are the future plans that the management accountant does that will help the organization to oversee what will happen in the future in terms of the pricing and in terms of the products themselves, and plus where to sell them. So that's what we can talk about planning, as far as how the management accountant is helping that planning process. Secondly, we are looking at controlling. The management accountant aids the control process by providing performance reports that compares actual outcomes with the planned outcomes for each responsibility center. We shall look at the responsibility centers. What are they? But I know with the cost accounting we did, we must have covered those responsibility centers. But responsibility centers, we have the cost center, the profit center, and all that. They are or there are four in an organization: profit, cost, then there is sales or revenue. They are always four in an organization, as we shall look at them. So the way this department, all these responsibility centers, as we said, the profit, the cost, the investment, and the profit, as we discussed them, we look at how we are going to control the outcome of each. If at all we had planned that maybe in terms of costing, we are going to incur this much, then we can say that since we are going to be incurring this cost, then we need to see what we have actually incurred. Then we'll be able to measure the variance and we see where we went wrong and what we have actually achieved as a saving in an organization. If at all we have incurred more than what we had planned, then what made that to happen? So what the management accountant does, because that's the process of controlling, what the management accountant does is to give you those reports that in such and such and such, we had a variance and it was caused because of ABCD. Then it goes ahead to give what can be done so that to mitigate that. So the other thing we can look at is organizing. The other thing we can look at, we said it is organizing. How is a management accountant help in organizing? We are saying that organizing, this is concerned with the determination of the original structure and working on the relationship among different functions within the organization. Because we are seeing that the management accountant assigns the responsibility center to different people within the entity. Someone can assign a person in the profit center, meaning that person is responsible for profits. You know, when you are responsible for profits, it means you are also responsible for revenue and costs, because to get the profit, you get the revenue minus the cost. So if you are responsible for profit, it means you are also responsible for sales and costs. If you've been assigned to the cost center or the cost as a responsibility center, it means you've been tasked to minimize the costs that are going to be incurred within the organization. It means you are only concerned about the costs that are incurred in the organization, how you can mitigate some of them, how you can avoid some of them, how you can try to be profitable as a cost center. Because there are so many departments which are cost centers, like the service department within an organization. It does nothing. We are just incurring costs there. We are paying rent. Sorry, we are paying salaries for the people who are working in the customer care services, but the customer care services, sometimes they don't generate income. So as the person who has been assigned in the profit center, you may look at a way how you can be able to make a cost center earn some profit by maybe allowing some customer care staff to make sales. When they make sales, of course, money is entering into the organization. But if you leave the customer care department to be responding on the queries without responding on the sales aspects, then it is going to be operating at cost only, which will be a cost to the organization. So those are the things that we look at, that when you're organizing, you look at the organizational structure. You assign different roles to different people, and you give them what you expect them to be doing. Because if you are a profit center, you are responsible for looking at what the organization is doing and be able to get profit out of it. Even at the customer care service, you can be able to make profits there by allowing some of them to receive calls that are making orders, to encourage them to convince more customers that these customers who are coming. If the customers, they're just coming to ask about the products, let them make sure that they are selling. And we don't only look at the sales department to be able to, or the sales responsibility center to be able to look at the sale, to develop the sales alone. So those are the things that we may look at. Maybe to add on the communication we have talked about. This is done through putting up and maintaining an effective communication and reporting system. It is very important because we can know who is reporting to who in an organization, so that we are not going to be having challenges by some people like having more responsibilities than, or doing what they are not supposed to do. That will help us to know who does what in an organization and who is responsible for any given activity. So that's what we talked about. We talked about the organizing. It's like someone is just bringing order within the organization. You assign people what they are supposed to be doing. You assign roles to them, what they should accomplish. In that aspect, it means these people, they are going to end up finding what to do, and they aim at achieving that. So with the communication, we said we do that by putting and maintaining effective communication and reporting system. Reporting and communication, effective communication. We said effective communication is when you communicate something and at the same time you receive the feedback. If you don't receive the feedback from what you have communicated, it means that's not communication. That is not an effective communication. Communication is only effective when you have received the right feedback. So the communication process is, first of all, knowing who actually reports to who. Because if you know who is supposed to be reporting to who, then you don't need even to hustle a lot, because at least you know, if I want ABCD, I should go to this person. If this person wants something, he should go maybe to the next supervisor, as in their line of supervisory. An example you can look at is maybe the accounts assistant. You find that an accounts assistant in an organization reports to an accountant. Then the accountant reports to the finance manager or the CFO. And that alone creates a flow of information. Hence, there is a need. Then, because at the end of the day, if there is a flow of information, there is no need of someone waiting if let's say the accounts assistant has got a challenge, to just wait for CFO to be in the office so that his or her concerns are going to be addressed. You address that to your accountant, then it will be the accountant to find out what can be done. If it is the CFO who has a challenge, sometimes they are going to be reporting to the CEOs. And you can't just be waiting maybe to get the information from the group, maybe group CFO. So that's basically what we can actually look at in the documentation. But what we emphasize is we create a communication structure that is very clear within an entity where there is smooth flow of information. The whole idea is to look at that the information is moving smoothly. Because what happens in these organizations, you may find that a certain organization, maybe let's say a manager if let's say it is a group company, it is a group which has an head office, but different branches, like in different countries. If let's say MTN Group, it has its head office in South Africa, but we have MTN Uganda, MTN Rwanda, and all that. So if the organization is very big and the communication line is not clear, then you will not be knowing who is supposed to be knowing certain information. If let's say the information is not supposed to be given to everyone, and you can't know who is reporting to who is doing what. So it is the work of the management accountant to find that there is a smooth flow of information. Maybe the last bit of the roles, we can talk about the motivation. Someone may be wondering how motivation is coming in as a role of the management accountant. We are saying that the performance report and the budgets that are produced by the management accountant have an important influence on the motivation, because it is those reports that communicate the performance, relating to the targets or the plans. Because if these management accountants, they are creating their plans, they have also to, in these departments, they are going to be, after assigning targets to every department, they are going to make evaluations, performance evaluation, and they evaluate each department to vis-a-vis the targets, what you have the actual performance to the target performance. So when that happens, it means those who have performed better, they are going to be, you'll find that in the next lot, you may find that these management accountants, they are going to advise maybe for them to receive some bonuses. For those who have actually performed well, to receive some bonuses. And that's how motivation comes in. It comes in as a result of doing performance evaluation. That performance evaluation, even if it is not done by them, at least they are the ones that are doing the planning within the budgets, because we said they help in the planning. Since they are helping in the planning, it means they're also responsible for, when they review that, they can recommend for those to receive bonuses. So because what happens with the performance of the employees, when the performance of employees is appraised, there is always a reason as to why these organizations are doing the performance appraisals, or they are evaluating the performance. Like sometimes you may find that employees, they are praising the employees so that they can see the people to give rewards in terms of bonuses. You may find that they are appraising because they want to see who are responsible, who can be able to be promoted, who are supposed to be dismissed within the organization. So, and most of the times we find that they don't even want to promote, they don't want to dismiss, and they don't want to give bonus, but they want to see those with weaknesses so that they can actually help them out and see how they can be better. Because that's all. That's always the interest of the company. You have to see that at least the performance is not going to be too low. And those who are not performing well, at least you give them, you see where you can help them, either to take them to further studies and they improve. Maybe if they are lacking, bring refresher trainings and all that. Therefore, the performance reports prepared by the management accountant helps to see the best course of action to take depending on the performance of its employees. Hence, management accountant is aiding that motivational process, because if it is going to be motivation, then we can also be able to motivate our employees. So that's basically what we can look at as far as the roles of management accountant are concerned. So let's try to look at the ethical requirements of the codes of conduct. This is just the moral right, doing something. You know, there are certain things that are legally correct, that are legally binding, but when they are not morally correct. Because these laws are made by people. People make errors. People can give, and laws, the reason as why they keep adjusting these laws is because things keep turning around every time. So if a law has never been amended, and by the time it was said, it was okay, but by this time, it is maybe interfering with other circumstances. So you find that these are the codes how a management accountant should behave. What everyone is expecting for the management accountant to be doing. Actually, what we expect for the management accounting to the management accountant to be knowing that if I don't do this, then it is going to be unethical. So when we are looking at this, the problem is not all about looking at the ethical requirements, but the reason as why we are getting to know them is because we want to know if someone does otherwise, what happens? It means it's going to bring conflicts within the organization. And we shall see what will happen if at all that happens, what this person does, if at all there are conflicts within the organization. But these are the things that are governing every profession. So here I want to see how management accounts when they are executing their laws and responsibilities. These codes of conduct for management accounting, for management accountant, they are not of any difference to, they are not of any difference from those of other professionals like doctors, like lawyers, auditors, tax accountants, teachers, and all that. The codes of conduct, they are always the same, or they are always similar to all professionals. Hence, we are just looking at what they should be, how they should be behaving as they are executing their duties. So when you get to know the codes of conduct of a management accountant, it doesn't mean that they are different from those of a financial accountant. They are the same. And the way we explain them here is the same way they will explain to teachers, lawyers, so long as they are professionals in their careers. That's the same thing that they are supposed to. We expect them to do. One is integrity. Integrity, the management accountant should avoid actual or apparent conflicts. actual or apparent conflicts of interest, and advise all appropriate parties of any potential conflict. In other words, that person, that management accountant, he or she is responsible for giving advice. But when you are giving advice, you should avoid engaging in any activity that would compromise your ability to carry out your duties ethically. In other words, we are saying that if you are to do your job, if let's say you are doing performance evaluation, just to do it in a sense that you are not sidelining with anyone. There is no conflict. You avoid any potential conflict that may arise on the things you do. You call a spade, not a spade a spoon. That's what we call integrity. Because we are seeing that it's normally more with honesty. You be honest to yourself and to the people you are actually to the people where you're executing your duties from. Here we try to see that we should be honest when executing our roles, even when someone is not actually there watching us. Because someone may try to be honest because there is also maybe another person is seeing, I would have done this, but the other person is around. So we expect that the management accountant execute his or her duty even when no one, with the honest, even when no one is watching. And that calls for doing what is right, or you do the right thing to avoid a conflict. An example you can look at, maybe if maybe let's say you are a lecturer, and at the same time you also set exams for the students, and in that situation, if you're in that situation, you may find that if students are failing, if let's say you are a lecturer or a tuition provider for CPA, and you're also the one setting exams, at the end of the day, you set and mark them. If you find yourself in that situation, it means it will be very hard for you to avoid temptations, for sure. It will be very hard for you to avoid being tempted, especially when you see your students are failing the papers, but you are the one who actually sets, and at the same time, you are the one who actually marks the papers. So that's why if you find yourself in that situation, we only advise, if you are going to be good at your job, make sure you just select one. You can't be at the same time, you can't be lecturing at the same time you're setting exams, because it's like you are just giving people, because if they fail, at the end of the day, you are the one who is teaching those people who are actually failing. So if very many are going to be failing, you'll be tempted to make at least some of them, to increase, to add on some small marks to make sure that people can actually pass. So to avoid that, and that way of being tempted to add some extra mark for given students, it will be what we call the conflict of interest. Because you are tempted. So that's why you advise you either be a lecturer or you just be you just concentrate on setting exam or marking exam, but you don't be both, because it will compromise your integrity. So that's how best I can explain integrity as far as the ethical requirements. Let's try to look at the confidentiality. We are saying that a management accountant avoid disclosing confidential information acquired in the course of their work, except when authorized or legally obliged to do so. In other words, you shouldn't share this information if the information they have, because a management accountant, you are in a position of having any information that is belonging to the organization, whether it is secret or whether it is the normal information that everyone can have. So if the information has been made secret to certain people, then you shouldn't avoid that information to other people who are not supposed to receive it. Only when you can only do so if at all they are being authorized, that maybe they have requested and they have been authorized to have access to that information. But other than that, they shouldn't. So we are saying that confidentiality, because we are looking at confidentiality, confidentiality is something that is very key to the organization, because when you link the company information to the third parties, that means you are just breaching that confidentiality. By default, you just exchange the information, the company information, to another person who is not supposed to know that information. You are breaking that confidentiality. But there are circumstances where you are supposed to do so. Maybe like in court cases, courts of law, someone they are in that you are legally called for to be a witness, maybe, and you want to tell what exactly you saw. Because these days, many companies, because we are seeing that these days, many companies are making people to not to have confidentiality because of these smartphones and social media platforms. When you can find the information, because you can find the information linking on WhatsApp, someone sends an information and someone picks the information and puts on their social media platforms. Even they may be not they may be unaware, but they find that the information has been shared to different platforms. And that information is making the company, or is costing the company, because it has been given out. If let's say we can look at companies which are manufacturing, if we have different ingredients that we put in our products that help us to sell more, if by default the information links and the outside capacity gets to know our ingredients, they will end up copying the products. That's why you find that on these products, the packaging products they put, they don't actually put all the ingredients that they use in the manufacturing of those products that we consume. Because they will know that if we put all of everything, then we are going to be raising our competitors, because we give on those, you see all the details, but you find that there are certain components they don't put, and it's their secret. So that's how it is. If the information links, you may find that it is going to bring to have an impact on the organization. And that's why most of the times these days you find that when these companies are employing, especially in responsible positions, you find that they are getting people who are above 35 to 40 years. Because they know by default someone is 40, they expect you to have some kind of confidentiality. You don't just share the information, even if it hurts. You may not just share the information anyhow. And that's why most of these adverts you keep seeing, they put the age, because they want, they assume that there is some maturity they want as far as their employment is concerned or their recruitment process is concerned. And it becomes one of the selection criteria. If the person is below that age, let that person go. Most of the times it is because of these confidentiality issues. These people who are still young, everything they see, they want to share on social media. So that's how it is. But we expect that the management accountant should be a person that can be able to keep the secret information secret. Then the third one, we can look at objectivity. And objectivity is more of being fair, not being biased. You are not biased. The biasness is not there. So we are saying that a management accountant should communicate information fairly and objectively. In other words, that person, the management accountant, should communicate information without any bias. In other words, the management accountant should disclose all the information relevant that could actually help the person to reasonably expect to influence the intended user's understanding of the report. What we mean here is that if someone says you are going maybe to call, if you are not going to communicate objectively, then it means that someone, if let's say someone says that this so and so doesn't communicate objectively, it creates a sense that maybe that person has seen there is some level, there is some kind of biasness within the statements. With these management accountants, we are going to be making decisions. You're a decision maker and a problem solver. You shouldn't put in feelings when you're making some of these judgments. Because you may find that when someone is biased, you may find that the information he should have told you is ending up not telling you that information because he's already biased about the aspect you are discussing. For example, sometimes we see these people who are marketing products, company products. They only tell you the positive side of the product or service, and they don't tell you the negative side of the product, because they know if they tell you the other side of the product, you may end up not buying that product. And for them to avoid that, they only tell you the positive side, since the negative side will influence your decision. So if I told this customer, you had told maybe the customer, this product, if you overuse them, maybe you'll get some of these and these and these and these aspects. If let's say maybe this bleaching, these people who do bleaching, you find someone, they have used it works for that, what they have actually paid, but there are some things that they leave behind as you go into that process of bleaching. So it's always important for you to be objective, that you tell all the information that is not biased. You disclose each and every information. So As a management accountant, we expect you to disclose all the information that is relevant to the third party. So if you don't actually do that, then we say you are operating unethical. You are unethical, or you are breaching ethical requirements. Then the fourth one, we can look at the professional due care and competency. Professional due care and competence. This means maintaining an appropriate level of professional competence by ongoing development of knowledge and skills. Because here we are seeing with the professional competence, we are seeing that the way we accumulate competence is through doing some work or learning something new every day. It may be accumulated within maybe your working experience. It may be accumulated, maybe someone is adding some extra knowledge, but most of the time it is achieved under the working experience. Someone who has a more working experience is more competent than someone who is more educated. In other words, you may find someone with a master's, but that person, what the person does, you can't even tell. But you find someone with a diploma, the person actually is giving an impact to the organization, because this person has accumulated a lot of experience when he started working. But this one, maybe the person has just graduated with a master's, is actually knowing nothing because he has just gotten the professional qualifications. So with professional due care and competence, we need to separate some of the aspects. We need to know the professional or the academic qualifications, and we separate them from the professional competence. So as we said, we normally get professional competency through continuous probational developments. They are called the CPDs, continuous probational developments. So as a professional of the institute, or as a student of CPA, we always find that the institute is preparing professional workshops and seminars, and they always tell you the people they are targeting. They also tell you the skill and the knowledge that you are going to gain from that particular workshop or seminar. If it has been an employment, if it has been employment, someone has been employed, you find that that person is actually gaining knowledge every time that person is employed, that person is working for the organization. You find that the person is gaining the knowledge, and that can be explained under the learning curve, as we shall look at the learning curve, because we assume the learning curve that every time someone works, the time they take to do a certain job keeps on increasing. Sorry, keeps on reducing, because we assume that the higher the experience, the lesser time it takes for someone to finish an activity. So we shall look at that when we reach there. So the only way someone can be competent is by having the knowledge and skills. And we say the knowledge and skills are only accumulated either at work or those CPD, the continuous professional developments that we go through, the workshops, the seminars, we keep learning. So it's when you try to look at competence, it's not a one-off item, or it is not a one-time thing. Because at the end of the day, if let's say you're just comparing the students, if you have maybe finished a CPA course, you should always go for those workshops in order to get the refresher knowledge, refresh your knowledge and skills. Because at the end of the day, that's the only way you can be able to earn the competence. If at all you are just finishing from school, the only way is to go for those refresher trainings. You look for jobs and you start working, or you go for those continuous professional developments, the CPDs, as are organized by the institute, because the institute for the Auspau organizes those CPDs, and people keep learning and they keep refreshing their minds. But we need also to differentiate the professional due care. The professional due care, for it looks on how you do your work. In other words, we have different standards and regulations in the different professions. Like in auditing, we have the ISAs. In accounting, we have IS and others. Even in the medicine industry, they have also their standards that are governing there. So we look at we look at the regulations that are governing us. And to be competent, we need to operate according to those laws and regulations. Because if at all you have gained the competence, but you are not working under the regulations that have been set, because every country has its own, or every discipline, career discipline has its, maybe if it's accounting, you find there's a regulator for the things that are supposed to be done in accounts, how financial statements are supposed to be prepared, how we are supposed to do such and such things. So if you are following them, then that's the professional due care. In our as we are concluding for this professional due care and competence, what we are mainly focusing on is the knowledge and the skill, not the qualification. Because you may find, for example, if someone doesn't, if maybe someone doesn't have the academic qualifications, but the person is doing the job, we are more concerned in having the knowledge and the skills. And those knowledge and skills we said we are obtaining them from the experience and the other training, continuous training. Then if someone is doing the job and they're actually doing it well, then we are saying, even if they don't have the academic qualifications, we say those people, they are competent. We say they are competent because you may find someone, as I said, you may find someone with the masters, but you find that person has just gotten the masters in class and never went for any practical experience. So we can't say that that person is competent because you can't even do anything. It is just that you just got that from class, but you can't implement it. And that's why even with the CPA qualification, you have to, after finishing it, you have to go for practical training, 3 years for you to become a member. The reason for that is to make sure that at least you are competent. It's part of the codes of conduct. So we may be educated, but at the end of the day, it doesn't actually guarantee that you are going to be competent. So that's it for the professional due care and competence. And some of those aspects that we try to look at, the scenarios we keep bringing, those are the same scenarios that you are going to find in the papers. You find someone, they may say that the person when graduated and looked maybe for, the person tried to look for the job and failed to get the job, and he started maybe his own school. Then in the question, you may find that they're asking, what are some of the unethical behaviors that may arise in that scenario above? Of course, you say that the person who has just graduated, how can you just start up a school? Because you have never worked in a school, you don't even know how to operate a school. So it means the person doesn't have the professional due care and competence. Okay, the professional due care may be there because he's following the laws that are governing schools, but the professional competence is not there because the person never worked. Because the scenario was given that the person graduated, but he failed to look for job, he failed to get the job, and he started his own school. So those are the scenarios that we are going to be looking at the question. The question may bring those scenarios and you fail to interpret them. So that's why we are putting more emphasis on some of the real life situations. We'll be able to see how things are going to be actually happening. So we look at the last bit, and the last bit is all about the independence. Independence, as the word says, it implies that the management accountant should not depend on the third party judgments and decisions in order to draw conclusions. In other words, what they mean is that the management accountant should always draw his personal judgments and analysis. In other words, the management accountant is supposed to draw the conclusion from his personal judgments and analysis. First analyze before you make a move or you make it. So as a management accountant, the only thing you can do is you can listen to what others are giving you, these people's advice, and that will be allowed. It will not be that they are influencing your independence or they are compromising your independence. You listen to them, what they are saying or what their decisions are. Then when you are done, you have to look for ways of how to do what these people have been saying. You look through and you make a decision that is informed. And even you can also receive advice They may advise you on what you should do, but at the end of the day, it's you to dedicate your conclusion, not looking at what people are saying. So that's basically what we can talk about from that. Maybe to look at the resolutions of the ethical conflicts. If at all what we have actually discussed is not followed by the management accountant, and that's what we are going to look at in the next video. So don't forget to subscribe, because more is coming, as we are going to do as many as possible and be able to analyze each and every aspect with ease. Thank you.